All right, we will go ahead and get started here. Well, good morning or afternoon, everyone. Thank you for joining us today for our first part in a four-part webinar series on navigating business and tax considerations for operating in the U.S. My name is David Rickhart, partner here at BGBC Advisory, and I'm excited to be co-hosting this session alongside with our guest presenters from Sullivan and Worcester, Michael Student and Jonas Aha. We'll do some brief introductions here about ourselves and our firms before we jump into today's agenda. Also, Laren Palmer from BGBC will be collecting any questions asked throughout the presentation, so feel free to send those in, and we'll get to those at the end of the presentation. Make sure we get some answers for you there. So again, my name is David Rickhart, partner here at BGBC Advisory. I lead our client accounting services area as well as in part of our international team that has been serving businesses to help understand, be compliant in accounting and tax regulations when operating here in the U.S. Michael, Jonas, you want to do some brief introductions for yourself?
Sure. Thanks, David. I'm Michael Student. I'm an attorney at Sullivan and Worcester in New York. My focus is working with companies that are entering the U.S. market or operating on the ground here. So cross-border work is my focus, and within that, most of the clients that I work with are from Finland. So this is a subject that is near to my heart.
Yeah, and I'm Jonas Aho, and I work for Sullivan's corporate department, mostly doing cross-border M&A. And before I come into the US, I used to practice in Finland for about 6 years. So I'm a dual admitted lawyer. So I have previous experience from Finland and now working here in the US.
Great. Quick intros on our firms. So BGBC, so a couple points. So we're a full-service tax accounting and advisory firm. Been giving exceptional client service for over 30 years. We have a long-standing history of assisting international clients here in the U.S., but our longest background is a 25-year history helping clients from the Nordic region and specifically Finland establish entities and work here in the U.S. And then one of our proudest accomplishments is being named 7 consecutive years as one of Central Indiana's top workplaces. Speaks to the culture that our firm has.
And Sullivan and Worcester is a mid-sized law firm. We have a little over 200 lawyers in several offices, including London and Tel Aviv, Israel, as well as Boston, New York, and Washington. We have a general business practice, a significant part of which involves cross-border work and international transactions. We cover capital markets, M&A, working with companies entering the market here or operating here, litigation, real estate, intellectual property, and other things that those companies may need. And like David's firm, we have a long history of working with Finnish companies and are very happy to be continuing it.
Great, thank you. All right, so for today's agenda, we'll be covering some high-level topics, kind of starting with a legal system overview and some takeaways, look as you form an entity in the U.S., and then dive into several topics to build your foundation in the U.S. and understand registrations, compliance, operation items, and some other helpful tips. Hopefully you find everything insightful as we explore expanding your business in the U.S. And Michael, I will let you take away.
Thanks, David. There we go. So we're going to start with an overview of the U.S. legal system and a couple of comments about how it differs from the European system. Forgive me, we're having a little bit of a trip to law school for a moment, but I'll offer you 2 thoughts. One is it will be short, and second, there's a practical aspect to this. So when we look at the U.S. legal system, it's what we call a common law system. And the thing to note about that is that there are really 2 sources of law here, one of which is codes or written legislation, but the other of which is case law. And our system depends to a great extent on how the courts develop different rules, and many rules depend very much on the particular facts underlying a particular case. And that, I think, is a little bit different from what you find in Europe and certainly in Finland, Jonas.
Yeah, that's correct. So in Finland, most of the stuff that's here coming through the court cases are just codified in Finland. So we have a lot of different acts and statutes. That's correct.
And on a practical level, for business people, one of the things that means is the questions that you'll ask your lawyer may not generate kind of clear, concrete answers. And it may be more, it looks like this, it should be this. We'll have to do some research. And that can be a frustration, right? If you're used to getting advice that says you will be fine doing X, this takes some getting used to. And unfortunately, it's just a factor in our system. And in some areas, it has more impact than other areas. But I'll give you one good example: technology licenses. Almost all of the law about licensing technology is a matter of what we would call case law. So there is no general code on licensing agreements. We do have one on the sale of goods, but for licenses, service agreements, it's very much a matter of how the rules evolve in the course of the cases that end up getting decided in court. Fortunately, there are some pretty reliable general principles that can easily be applied to most instances, but especially in a closed case, you may get a much more of a should be type of answer than a definitive answer. And that, again, it's a frustration, I know, but it's just the way the system works. Second point, which is also maybe not a happy one, is going to court here is certainly certainly an option if you have a dispute, but it tends to be expensive. We don't have a loser pays system, so that means, you know, whether you win or lose, typically you're going to pay your own legal fees. So, you know, that can be a big disincentive if you're thinking about bringing a lawsuit. It's a long process, and from the standpoint of business management, what I would say is the people who are involved from the company that's involved in the suit have a much more extensive involvement in the case. They can be required to testify. There is a lot of document production, so this can be a time-consuming, aggravating type of process, and can be a distraction from your principal goal, which is to conduct and grow your business at the same time. Arbitration is fairly popular here. It may be a little bit less so than in Europe. One of the things that many lawyers find concerning about arbitration is there's, in practice, very little right to appeal. So if you lose, the chance of your getting that decision reviewed is very limited, which is why you'll find many lawyers say you're better off in court, despite timing, costs, and other things. Most people we talk to about coming here and doing business want to talk a little bit about our litigation culture and the things they read in the newspapers about punitive damages in these cases where the actual damage or injury is quite small, and there's this enormous award of punitive damages which are not related to the actual damage, or class actions where hundreds of people get together and sue a manufacturer, things like that. I think the way I would put it is much of what you read is true, but almost all of it is exaggerated. So, you know, in my own case, I've been working with clients for years and talking to them about liability issues, managing risk, anticipating it, mitigating it. And over decades of doing that, we've spent many hours on these subjects. The number of times it's actually come up in a real life client situation is incredibly small. It doesn't average 1 in 3 years. It's very, very rare, but it's the kind of thing where if you have a problem with getting sued, you'll be happy that you've taken the necessary precautions. So it's perhaps a big investment for what you hope will be a small payoff in the sense that you won't need it. But it is something to plan for, anticipate, and do your best to manage. So, setting up a subsidiary in the US, there are a number of business reasons why a company might choose to do that. And they are typically very good, very sound reasons. One of which is the US market, the customer market, likes to see commitment. And one of the ways you show commitment is by kind of planting your flag in the US. So customers are happy to see that. It gives them a greater feeling of security, that you're going to be there. And that can be true despite the fact that you're really operating and staffing it remotely. Um, Sometimes you'll want to set up a US company and have it staffed with a, service staff, salespeople near your market. That can also be a great reason to do it. On the legal side, um, we look at it a little bit differently. And I would tell clients, and I think most advisors would tell you, when you're doing your planning and thinking about issues like this, try as much as possible to remember that the principal motivation is to do your business, and that should be your goal. So, um, letting the legal side of things drive how you do your business is something that you may find necessary on occasion, um, but we would still say the most important thing is getting your product, your service to market, generating customers and revenue. But having said that, if we take an example of a Finnish or other non-US company selling products here, selling services, operating an office with people on the ground, and we assume um, some kind of bad event, and it could be an employee is fired and sues for sexual harassment. It could be a product liability problem, some other commercial liability. The reason it's a bad idea for the parent company to be operating on the ground is this. In a really bad case, if the claimant wins, all of your assets within the group everywhere are exposed to that judgment. So it may take a lot of effort and cost for a claimant to get to them, but the assets in Finland, um, subsidiaries in other countries, everything, at least in theory, is available to satisfy that claim. So um, that's a potentially, devastating exposure, and we rarely see it, but we have. So the typical solution is to set up a separate company here, um, fund it with, some real assets, set it up correctly, operate it correctly. But generally speaking, if that's all done the right way, you can limit your liability and your exposure to the US market to what's invested in that US company and the assets that are in there. And so, now you're looking at, instead of chasing assets of the company that has the claim, it's to get past that US company, you would have to be going after shareholders, and that's a much more challenging claim. We talk about that a lot. Again, it rarely happens. I wouldn't say it's easy to prevent, but it's certainly something that can be effectively structured and prevented. One big exception on that, product liability. If you have a defective product that enters the US market, the way our law works, um, the legal system looks all the way back to where that product came from. So the manufacturer, the supplier, everyone down in the chain, the distributor, the party that sold parts that end up on there, the retailer, everybody can be sued for product liability. And there's really no way around that other than to adjust that by contract. And that's a whole separate seminar. But the point is, you need to be aware of that exposure. Um, it's Another thing that doesn't come up all that often, and one thing to remember, which is much more practical than it is an actual protection, is the manufacturer, if it's away in Finland or Brazil or Argentina or Australia, it's not so easy to pull that party into a U.S. court. So yes, the manufacturer, the offshore distributor, can be part of a product liability claim, but it may be relatively easy in practice to keep from getting too deeply pulled into that.
All right. Thanks, Michael. So now once we have kind of like a general overview of the reasons why you should always set up a separate entity here in the US, we can delve a little deeper of the different options that we have. Obviously, probably the most common and the most known for Europeans is the corporation. You usually see the abbreviation of Inc. or Corp at the end of the business name. Rather easy to set up. We usually instruct our clients that they should have around a week to set up the corporation, but it can be done, even in a day or two if really needed. Basically, you just file the certificate of incorporation or articles of incorporation, depending a little bit of how the exact state calls the document. You just file it with the Secretary of State, and once you get it back, the corporation is set up. The corporation is shielding your personal assets from the business liabilities, so it provides you limited liability. And probably one of the big differences is that compared to European companies is that a lot of the information is not public. So the directors, the officers, stockholders, and audited financial results are not public here when it's a private company. And also there's no need for audited financial statements for private companies. So as long as you're private, there is no requirement to prepare audited financial statements. You obviously need financial statements, but there's no need to audit of those financial statements. Also, there's no minimum equity requirement here in the US, but we usually tell our clients that you should have at least the money to carry on the business as long as it starts generating revenue. But like a strict capital requirement does not exist here in the US. Then the other option is an LLC, limited liability company, usually or always operated through operating agreement. You basically have two options. You can either have a member managed LLC or a manager managed LLC. So in a member managed, basically the owners are making all the decisions, and in a manager managed, the members appoint a board of managers who kind of similarly as in a corporation, the board of directors. So in the LLC, the board of managers control the business of the LLC. LLC is a very flexible in terms of structure and management. So it is a good fit for smaller businesses, but it is a less common for non-US owners, as corporations are often preferred, due to different kind of tax treatment. And also and investors here in the US usually prefer corporation as an option instead of an LLC. Because it's a little bit more beneficial for their tax treatment too. Then the third option, branch or a permanent establishment. From the legal point of view, basically only comment I have is that we don't really recommend having a branch here in the US from the legal perspective. It's rather difficult if you start with a branch. It's rather difficult to convert it into a corporation or an LLC later. So we generally try to avoid setting up branches or permanent establishment for our clients. David, you wanna
Yeah.
talk a little bit about the tax treatment?
Yeah, I would say, as we consider these things, that were mentioned here previously, but also a couple items as we go through. So for corporations, there's a flat corporate tax rate in the US, and then state tax rates can range between 1 to 12% depending on location. So the corporation's income would be taxed at the federal level and then across the state level depending on location and revenue levels. And then money coming out of corporations. So when money is sent back to, let's say, the parent company, that would be considered a dividend in the US. So corporations are known as the double taxation entity. So the income is taxed at the corporate level, and then as it's taken out in dividends, it's also taxed. But one thing to consider is depending on tax treaties with whatever company, the parent company or wherever you're sending the dividend to, you could be subject to withholding, or the tax treaties could be exempt from any withholding on those amounts. And then just understanding internationally how that money is taxed as it comes back. At the LLC level, it's considered a disregarded entity here in the US, so the income would pass through and be taxed at the owner level. So that's one thing to consider is the taxation of, all right, now are you a US taxpayer because you're an LLC, and now you have a US filing requirement individually that may look at, worldwide income, other things. So there's just things to consider, and also how US income is taxed in your home country as well when it comes back. As for the branch, also agree, not the best use here. So, looking at that permanent establishment in the US, so direct taxation of the foreign entity. So because that branch is not a separate legal entity, so the foreign company is directly subject to US taxation on the income earned in that branch. There could be some other taxes on the income earned here. If there's any pieces there that profits are repatriated home, and then limited liability as well as state taxation. So just really understanding the complexities of the US tax system with the federal level and then the various states that can tax, also getting into sales tax, other pieces there. So really kind of forming and branching off that corporation is what we see with most of our clients as well there. But I'd say key points or takeaways be understanding tax treaties for taxation on foreign profits and dividends, and then any filing obligations. So each structure comes with their own reporting requirements, and we'll dive some more in a future session on really the taxation of entities as they come here in the US. So the next piece is really just about building your foundation. So as we look at, right, we've kind of done the overview. What does it look like to come to the US from a legal standpoint? What are some items that you need to consider? But now that you're ready to expand, what do you need to kind of bring on? What teams do you need to get introduced to? So as we look at building a foundation, we really look at kind of three key parts here. So obviously we've been discussing the legal side. So from everything that's been discussed, you can understand there's complexities, differences between international law, US law. So understanding that as you're coming over, what are some exposure and risks that you just need to plan for. And then really accounting and tax. So that's where, BGBC comes in and helps with a lot of the compliance, local compliances on, where do we need to register? What taxes are there here? Are there any licenses? And then just differences in the US bookkeeping and just how operations work from the accounting side. Do you need GAAP financials, tax basis financials, however that looks? And then the other last part is, as we talked about, employing employees here in the US would be payroll, benefits, and HR matters. Again, discussed in another future session we have, but it's a really big piece. So obviously we all know that the benefits, health insurance in the US is a lot different than it is abroad, as well as just payroll regulations, requirements from various states, depending on where your employees are located. Especially in the post-pandemic economy that we're in, it's not so much centralized offices with 70 people in one office. It's a broad remote work environment. So really understanding how to stay compliant in those. So really these key pieces here, if you get going early, really consider all of these at the beginning and just be ahead of things. You don't want to be behind the 8 ball when you're ready to, hey, we're going to hire this employee tomorrow, but you haven't gotten your EIN, you haven't established the entity. What's really the runway on being able to really operate in the US? So those are key considerations to take away as you assemble a team.
All right, we can. I kind of started talking about the incorporation process and documentation, but we can, delve a little bit more into detail here. So once you've decided what kind of entity you want to set up, let's use corporation as an example now because it's the most common option. You start by filing the certificate of incorporation. You file it with the Secretary of State. Usually people want to set up the corporations in state of Delaware, but you can obviously do it in any of the states. But it's mostly done in Delaware, mainly for the reasons that the corporate law there is very well established, so you kind of know what to expect. And there's also, like Michael talked before, there are a lot of court cases coming from Delaware, so there are a lot of precedents. After filing the certificate of incorporation, you have to prepare the necessary board and stockholder consents, and obviously prepare the bylaws for the corporation. All these documents are internal documents, so you don't have to file them with the Secretary of State. That's kind of a big difference compared to, for example, Finland, where you kind of file all these documents with the commercial register. Like said before, it's a very fast process, a very simple process. And during that process, you need to appoint the board. At least have one board member. There is no nationality requirement, so basically you can have one Finnish person being the board of the corporation. And then probably worth mentioning is that there are fees setting up the entity that you pay for the state. Those are not significant. Michael, you can correct me if I'm wrong, but I would say that the fees are around maybe $800,000.
Yeah, something like that. Usually, 800, something like that per state. They vary a little bit, but not not really a big expense in terms of, starting a business and all that you're hoping to do here.
Yeah, exactly. David, you want to talk about state qualifications?
Yeah, so as we look at state qualifications, so when establishing the entity in the U.S., as was mentioned, it may be initially formed in Delaware, but you may never place in a single employee in Delaware. That's really just kind of where the corporation is domiciled. So what we look at is as you start to hire employees, you may bring inventory over here. So you may find a warehouse, let's say in Nevada, have employees in New York and Michigan, sales employees, wherever your market is. So really understanding, how you're operating in the U.S. to look at state qualifications. So each state has a Secretary of State. They all have their own rules, laws, regulations as to how are you doing business in our state. So really kind of taking a look at what's going on in each state, where are your sales, where are your people, where are your product. Those are the kind of the key things that we initially look at. But each state is different, so there's not really a single answer for do I need to register in this state? So we really kind of rely on, our tax team as well as legal teams of the entities to understand what's the necessity for any registrations in those states, and really understanding that, and then staying compliant as you go through with operations, because some of those may sneak up as there are, several different reasons to have to register in various states.
And then I'll share a few words about registered agents. Each state's corporation law requires that a company appoint a registered agent. And there are really two choices. One is if the company has its own person, an employee or someone else in the state, they can do it. The other is a service company. And the role of the registered agent is pretty limited. But one of the things that it does is receive legal correspondence from the state, including notices about some of the reports that David mentioned just now, and when they're required, and all kinds of other things. We strongly, strongly recommend using a service company for this. It's not a huge expense. They're professionals and they're well set up to do this. And they will have a system where if something comes in to the company's attention, they have on record people to send it to, they will receive and send on the notices that say you have to do your annual report in Ohio in June. And then it's, August and Massachusetts is due. And it's really not so easy to track that stuff. Um, and it's much easier to have these reminders coming. The thing about having an individual, an employee, serve as registered agent is it's nice, it's inexpensive, there's no cost. But this is one of the things that I think we can say over time is a certainty. That person moves, that person leaves the company, and nobody remembers we need a new registered agent. The consequence of that is those state mailings, they could be lawsuit papers. They're still going to that person who is not getting them. Nobody knows. And the company ends up in regulatory trouble, defaulting on a lawsuit or something else. So, um, again, strong recommendation to use a professional company for this. There are many. I think David and we both have preferences. Um, it's an easy thing to set up, and um, we or David can certainly help you with that.
Yeah, Michael, just to kind of piggyback on that, one thing you kind of talked about the cost, and I think it's, maybe a couple $100 a year, but that's kind of security, and documents aren't being sent to an old employee's address and various things is really worth that minimal investment. And then just the tracking and the staying on top of those state reports, which we'll kind of touch on later. And then the mailings of lawsuits. I've had clients where they get subpoenas from various states, and having to forward that on. And if you didn't get that in time, could bring it around some troubles. So. All right, next items are tax matters. So one of the biggest ones, so now that you've kind of formed an entity in the US, whether that be in Delaware or some other state, that's the initial incorporation. Now, in order to file tax returns and really kind of operate in general, your entity will need to obtain a federal EIN. So that's kind of the federal tax identification number here. So you'll use that for payroll, you'll need it for setting up a bank. We'll kind of walk through that process, but getting that online, as we'll see here in a future slide, is your next piece. The state and local registrations, we've kind of touched on that previously, but knowing how to comply with state and local tax laws. So as we mentioned, right, there's the federal level and there's the 50 states, and then all the states have localities. So understanding what states you're in, where your people, product, and services are being sold at. Are there state registrations that you need to do? Are there city registrations or licenses that you need? So really kind of having that broad overview of where are you now, where are you headed? Let's stay ahead of these things. Let's track, where your sales, you may not hit thresholds in certain states now, but you may next year. So let's just track how the sales, are going to various states, where you're hiring people, and all of those things. And then a big piece is the transfer pricing. So for corporations and branches, intercompany transactions between U.S. entities and foreign parents need to comply with U.S. transfer pricing rules to ensure that profits are correctly allocated between jurisdictions. So getting this established early and having documented for a potential audit in the future from the IRS is very important. So as we're getting on, right, a lot of it is just, hey, let's get formed, let's comply. But then it's all right. Now, how is your U.S. entity operating with your international entity, right? If you're a service business, is the parent providing some services? Where's the IP held? Is that in the US? Are you using a piece of that? So what's that transfer pricing rules? If products are being sold in the US, who owns those products? Are you buying them from the parent company? How all that works with markups and profit margin there. So big piece on transfer pricing is get it done early and keep it documented. And then any updates that are needed to that, we always ask as we start with entities, have you talked about transfer pricing? Do you have anything drafted so we can at least have it in our records should we need it? Because it's kind of that go-to at the end of the day if you were ever to come under audit. And then just general tax and accounting advice. So consulting with professionals on ongoing tax and accounting support. I understand sometimes costs are prohibitive, with funding initially, but just really kind of getting a base understanding and kind of that discovery call with your accountant, legal counsel, and all right, what do I need to consider now? keep tabs on these things. Let's check back once we have a warehouse rented, or we've hired our first employee. Let's see where we need to go there. So just continue to consult and keep your teams up to date on how the business is going, how you're expanding, so that they can help you stay ahead of any regulatory issues that you come up against. Go back to the employer identification number. So obtaining an employer identification number, as we said, it's key for required for almost everything. You can obtain this online with a responsible party, but that responsible party must have a social security number. So obtaining this, it can be done quickly if you have someone representing the company that has a social security number. One thing that we've seen in the past but really don't recommend is if we have an employee of the company, your first employee, hey, let's get the EIN, or we know they're going to be an employee, let's have them be the responsible party so we can get this EIN quicker. That responsible party, legal determination, but really understanding what that means. They are the one that is ultimately responsible at the end of the day for the company. Can sound daunting. So really just try to stay out of that situation. So what we have with a lot of our international entities is using a paper method to file for the EIN. And that turnaround time is generally a 2-week turnaround time. So this is why we say get started early as you create the entity, obtain an EIN, and then obviously look to hopefully hire employees and operate in the US, just giving yourself a good runway so you're not trying to squeeze everything into a 1-week time frame because you gave that offer letter to an employee because these things do take time and it is a process, a checklist that needs done. So just making sure that we're following through with that piece. And then a list of operations and other organizational tasks to consider. So banking here in the US. Some things to consider when opening a US bank account. So is the entity formed? So to open a US bank account, you must first have that legal entity in the US. The bank will generally ask for, hey, do you have your articles of incorporation with whatever state you're incorporated in? And then they may ask for other formal documents. They also ask for that EIN as well. Once you form the entity, have the EIN, you can take your articles from incorporation and your EIN documentation to the bank and hopefully start the process of opening a bank account. It would be mandatory to have that EIN as you open a bank account. One thing to consider with banking system in the US, so obviously due to regulation and just compliance matters. So with foreign ownership, some banks may have stricter requirements on companies with foreign ownership. They may ask you to include additional documentation for compliance checks. So it's important to find a bank that has experience in dealing with international business. We have several that we work with, where our clients have worked with. Some may be larger banks, some may be some more smaller community banks, depending on what their comfort level is, compliance. It may take as short as 4 days to as long as a couple months to open a bank account, depending on security and compliance regulations that bank has in place. And then also just in that banking consideration, just a bank that offers services tailored to international businesses, such as multi-currency accounts, a good foreign exchange or wire department where you can, if you're moving large sum of money, what's a good exchange rate that you can get if you're moving euros or dollars between accounts there, and then easy integration into your global operations.
And if I could, one comment to those of you who are thinking about or maybe planning sometime to enter the US, it's valuable to connect with someone like David's firm if they can help with the banking side of things, because doing it yourself is a very frustrating and difficult process. And you will find banks that will say, okay, we'll do it, but only if you maintain a minimum balance of X over the entire year, and other things that are either very difficult or maybe impossible. So there are a lot of things we would not recommend you do yourself. And you've heard about many of them today, but this is one I'd keep top of your list.
And then for insurances, you can jump in here, but really just understanding what are the necessary business insurances that you may need. Definitely general liability, you know, workers' compensation, commercial property, and insurance. So again, understanding how the business is operating in the US, what could be needed, you know, cybersecurity, insurance, you know, another important one in the US, obviously. So just considering those things, you know, so I don't know if you have anything else to add to there.
Michael, you wanna cover the insurance?
Sure, yeah, I'll offer some quick thoughts. One is, in addition to the factors David mentioned, if you're doing business with customers in the US, check your contracts because the customers often require that the supplier have insurance coverage. And I would say, yeah, you must have that. Do not sign an agreement that says you have the coverage if you don't. Again, it's the kind of thing that may rarely come up, but if that turns out to be relevant, it's a bad situation. Um, the other thing I'd say is, as a general practice, companies here use brokers. I think much more than they might in Europe, where it's more common to have, or it may be common to have a relationship with the insurance company itself. But brokers here can serve a valuable role in terms of helping with pricing, making the pricing competitive, advising about different companies, and if you have a claim, being an intermediary between your company and the insurer.
And then other filings. You guys want to start with those first couple?
Yes, these are other filings that are um, follow the incorporation, but are sort of, should be thought of as part of the process. The BE, or is the Bureau of Economic Affairs, it's part of the U.S. Commerce Department, does foreign direct investment surveys. So they require reporting on most new foreign investments. Many of them are exempt from the more extensive requirements that can be, not exhausting, not like a tax return, but fairly detailed. But there is an exemption for investments under $3 million. And so many companies will fit into that exemption. But the thing to remember is, to get the exemption, you have to file a Form 2. So this is done usually, I think it's within 45 days after setting up the company. Not a big deal. Many clients do it themselves. It's all online, but it's something you should, have on your list as you move forward.
And a CTA filing is the Corporate Transparency Act filing. It became effective from the beginning of this year. Europeans usually know it as an ultimate beneficial ownership filing. So you need to file, all the individuals owning 25% or more needs to file certain information about themselves. Also, in addition to above 25% filers, you need to file if you have senior officers or other people who are allowed to appoint senior officers or the board. And then there's a one kind of like a vague category where it just says that, people who are controlling the company in any other way. So maybe through the stockholders agreement or some other agreement. You also need to file information regarding those persons.
Yeah, and just to add on that, I think that is something new here in the US. And you know, there are some deadlines of those filings depending on when the entity was formed. You know, so I don't know if you want to just quickly touch on those deadlines. I think it was pre 1/1/24.
Yeah, sure. So yes, if the entity was existing before the year in 2023, you have to do it by January 1st, 2025. If you're setting up a new entity here in the US, you have to do it within 60 days of the incorporation.
So I think that's definitely important. Again, I think, as we said, building the foundation, understanding, you know, if we got it registered, you know, what are those next steps? So hopefully the legal team, you know, is understanding of that and knows kind of what the next steps are, but definitely something new in the US. So just making sure you're compliant there, as you may form the entity and then plan for operations later, but there's some things to do in between there. And then the last piece, Secretary of State information reporting. So we mentioned registering in various states if you're doing business. So those Secretary of States do require as administrative piece a semi-regular filing. So some may be annually, some may be biannually, some may be annually based on when you registered with the state, the anniversary of your registration. So that's another thing, as we mentioned, the registered agent services, they can keep track of all that. They get all those notifications. But tracking those filings when they're due, have they been filed? What are the amounts there that are due? Because based on your setup in the US, whether you have the parent company in the US or the subsidiary, some of those annual fees or franchise tax that is due may be significant depending on the dollars invested in various assets here in the US of maybe the parent company. So just something to understand and know that is required here in the US.
And here we have a few more items to keep on your list as you're thinking about and planning for um, operating in the US. Contracts is an important subject. That will be the means by which you deal with customers, vendors, and others. Usually the companies that we deal with will come to us with contracts they've used in Europe. Very often the easiest way to get them ready for the US is to start with those and modify them for the US market. That's a much easier process than it used to be because contracting practices have become more similar between the US and Europe. A couple of quick things to know. Um, business to business contracts here are relatively free. It's a little bit of an oversimplification, but basically if two companies agree to a particular provision, a particular deal, it's probably enforceable, unless it's illegal, if it's price fixing or something like that. But a lot of freedom of contract at the business level. Once you're dealing with consumers, there are more limitations, more constraints. There are consumer protection laws. There are disclosure rules. There are rules that certain provisions you would normally have in a contract are not enforceable. So that requires a great deal of care. And I think it's fair to say that those requirements are not only specific, they're detailed, and unfortunately they vary from one state to another. So some of you may have seen product literature that has something that like pages and pages and pages of legal stuff, and then it says residents of Nevada, and then residents of Rhode Island, residents of Illinois, and that's because they have different rules. And that's an important thing to be aware of. Employment, um, you'll be hearing much more about employment and how to handle payroll, HR, all those things in a subsequent series. But the thing to note for now is the legal system and market practices in the US are very different from in Europe for a lot of reasons. One of which is we have a very low percentage of employees who are members of unions here. We have a different contracting practices, uh, different termination rights. So that's definitely an area to have an early conversation about and not to do when you have an employee you're ready to hire in 2 days. This is something that needs some planning. Intellectual property, also important for a couple of reasons. One, you want to make sure that the intellectual property protections you have are carried over into the US and they don't get carried over automatically. Usually you have to do separate registrations and filings in the US. And sometimes there can be a time limit for doing that. So that's another topic for kind of early consideration and investigation for those of you companies that rely heavily on intellectual property of one kind or another. And now we have a few kind of practical pieces of advice, do's and don'ts. Um, I'll do the do's and Jonas will tell you what not to do. Um, use non-disclosure agreements. Be serious about it. You don't want to have kind of a level of paranoia that gets in the way of your doing business with people, but recognize that there is no sort of general obligation of confidentiality unless you sign one. And typically to have productive discussions, you're going to need to disclose information you want to protect. The next one, this is actually my favorite. And if you take away nothing from this morning, this is the one thing I really want you to remember. Companies need to sign contracts using the correct company name and people who are actually authorized to sign for that company. And what do I mean? U.S. company is planning to hire its first CEO. So it's a big deal. And everyone in the organization feels we have to make this special. And we have to send a message here that it means something to us. So we have the CEO of the parent company sign the offer letter. What concerns us is you may have then brought the parent company into the employment relationship so that when the guy is fired in 2 years and sues, he's suing not only the US company, but the parent company and saying, look, they signed, they're the employer. And that's not necessarily a winning argument, but it's an argument that's a real fight. So please, it's the same with customers and everyone else. Know who's authorized to sign for the company and sign in the correct company name. We do not have a register of authorized signatories here. Who can sign is handled internally by the board. But that's a piece of kind of maintenance that must be followed. In terms of risks generally, product liability, other things that we've talked a little bit about today, one important kind of message in all this is we have not identified anything today or otherwise that a company thinking about coming to the States should stop and say, you know what, I'm not going there because it is so risky. We see a lot of risks, we see problems. Life teaches us, though, that most things usually work right. And we would say, find out about these risks, acknowledge them, plan for them. There are ways to manage them, but don't let them keep you out of a market that you otherwise want to be in. Excuse me. Trust but verify. You may recognize that from Ronald Reagan, who liked saying that. Or he may have learned it from one of his Russian counterparts. But the point is, you will be meeting companies that want to do business with you. One of the problems here is it's a big, huge company and it's a big world. And of course, the people who are genuine don't look very different from the people who are illegitimate, because the second category is usually full of people who are good at trying to take companies in and pull them into lousy deals. So I would say don't take everything you hear or everyone you meet at face value. Don't become paranoid about it, but do make sure that you're dealing with legitimate people. We have had years ago and currently clients that get involved in deals that look good, they aren't, and usually that costs the client money, but equally it costs them lost time, because then they have to go find the real party to do their business with. Think about the exit is just a way of saying, when you enter into commercial relationships, it might be a joint venture, might be a long-term sale agreement. Do focus on how you get out of it if it doesn't work. It's not a pleasant subject. It's a little bit like thinking about the divorce as you're going to your wedding ceremony. But the time to think about this and plan is before it's actually happening or before it's even a risk. So keep that in mind as you do your planning and thinking.
And to add to that, just real quick, to Jonas before you jump in, but on the thinking of the exit, I think that's also a big thing on the tax and compliance side as well. Is, you know, what is the plan for the U.S. market or the company overall? You know, is it a transaction down the road? What that looks like, so you understand, right? As we get into sales tax compliance, we'll address that on another seminar. But you know, where is the cost of compliance there? But also when it comes up in due diligence, you want to make sure that you've crossed your T's, dotted your I's. So thinking about the exit or what the long-term strategy is as you're setting up that entity in the US can really help answer some questions, I think, as well as you're kind of establishing that team.
Yeah. And if you don't, so this should be pretty evident, but do not use materials you found on the internet. We have 50 different states here. You know, you might find something for state of California, and obviously it doesn't really fly here in New York or in Delaware. And you never kind of know the outcome of the materials you found on the internet. So please do not do that. Um, One thing that we kind of see a lot with people coming outside of the US, so they want to do it themselves. We definitely do not recommend that. I would say one big difference between Americans and people coming outside of, especially from Europe, is that Americans are way more used to using advisors. And this is not just an ad for using our or BGBC services, but there are a lot of risks here in the US, and using an advisor is a great way to mitigate those risks. And then one very simple thing but we unfortunately we see it, do not change the governing law in contracts unless you actually understand the effects, what's going to happen. You just can't take an European contract, come here and put it under the state of Delaware. It does not really work here. American contracts compared to European contracts are well, like Michael said, they're coming more and more like they're becoming kind of the same, but there are still major differences. So you can't just change one provision and assume that the contract will work here too.
Great. All right, so that concludes our content for today's webinar. We'd like to address any questions that have come up if we have a little bit of time. Laren, has there been any questions submitted?
Well, the first being, what is the most important issues to keep in mind regarding contracts?
Okay. Shall I take that? Two main areas. One is liability. If you're looking at a contract, if you're thinking about a particular deal, what do you want to think hardest about? And the first one is exposure. So those would be looking at the warranty, where you would like to have something that makes clear what each party is required to do or not required to do. And if you're the supplier, you want objective, clear language about what is a satisfactory performance. The other part of that is, if things go wrong, what's the worst thing that can happen? And that's really looking at, is there a limitation of liability? Most importantly, does it benefit you as the supplier? Because sometimes customers have it go only in their protection. So those are the main things. The other one I would say is very important and kind of easy to run into an issue with is language about intellectual property. If it's a license agreement, the specific scope of the license, if it's a service agreement, development agreement, what does it say about what the customer ends up owning? You don't want them to end up owning intellectual property that is part of the way you do business, or that is something that you would be, kind of adding to your IP base for future use. So be really careful about who owns what if there are services involved.
Great. Laren, any other questions? Laren, were there any other questions?
Yes, one more. What are the common pitfalls international businesses face when setting up in the US?
So I can take that and maybe a little bit, or we can all kind of touch on it, but I'd say misunderstanding state-specific regulations. So not understanding kind of, right, the US is different with its 50 states, so understanding they all have their own rules, laws, and regulations there. Sales tax, failing to register for sales tax, so understanding that environment. Another session we have. And then really just navigating complex employment laws, I would say is another piece that I'd see. And then ensuring compliance with local and federal requirements and just avoiding fines and unnecessary penalties if needed. You guys have anything to add to that?
I would second what you said about employment laws. It's a difficult and deceptive field because it looks very easy, and it's it's kind of a dark water but deep. So that's one that requires attention and assistance.
Great. All right. Well, again, thank you guys all for joining us today for the first session in our 4-part webinar series on, again, navigating business and tax considerations for operating in the U.S. Also, a big thank you to Michael and Jonas for joining us today and helping us on the presentation. Hopefully, everybody found it insightful and valuable as you consider or are already here in the U.S. And then just want to remind you all to be sure to join us for our future upcoming sessions. We're going to dive into some deeper key aspects into setting up and transacting in the U.S. Our next one is October 30th, 3 p.m. Eastern European, 8 a.m. Eastern Standard Time here in the U.S. And our guest presenter on that one is TriNet. They're going to be focusing on payroll, HR, and benefit matters here in the U.S., along with myself just on the tax consideration side and employment side on the U.S. and state rules there. So thank you again. Be sure to register for our next session, and we really appreciate you guys turning out.
And thanks from us as well. And thanks, David and the BGBC team for the opportunity.
Great. Thank you.